The equity markets right now are pointing lower across the board for the Dow, the S&P 500, and the NASDAQ futures. Following the CPI report, the Dow currently down by 138 points, 132 points, 0.4% there. S&P 500 also lower, and the NASDAQ futures pointing down by 1.25% roughly. Joining us now to talk more about this CPI report and its impact on the markets, we've got BMO Wealth Management Chief Investment Strategist, Young-Yu Ma. Great to have you here with us this morning. First and foremost, want to get your reaction to the CPI reading. And what we've been discussing is whether or not we have hit a peak in inflation just yet. However, these numbers continue to show that inflation ticked higher even in April.
Yeah, those are high numbers. Thanks for having me. They are challenging numbers, but we do think a peak is in. Although a peak is in, we do think the decline is going to be slow in inflation. What's actually going to be more interesting is the PCE inflation that comes out, because that's going to show the effect of consumer switching behavior. And so that's why the Fed focuses on PCE more, and that switching of behavior will actually have a dampening effect on inflation. So that's going to be, I think, the more important number, but the CPI numbers that came out today definitely don't point in the right direction. Even though they do point to a peak, it does point to a peak that is still at a very, very high level.
Isn't the major problem here, though, Young-Yu, that these price pressures are now spreading to services, to eggs? Egg prices last month up 10.3%. And doesn't all of that argue that the Fed perhaps needs to raise rates, not 50 basis points, but 75 basis points at its next meeting to get a hold of all this?
Well, we expected them to spread to services because we do expect behavior to switch from spending on goods to services. But the food inflation is definitely something that the Fed is going to be very concerned about. That's going to be sticky. That's going to take a while to come down. And that does affect just such a obviously complete.
But is it recession inducing? Are these food increases? I mean, this is hitting consumers in the wallet. Are these the types of increases that causes a sharp pullback in spending soon?
I don't think at the aggregate level they cause a sharp pullback in spending, but certainly at the lower income levels they produce very strained budgets. So it is something that's extremely concerning. At the aggregate level, most of the spending is still done by the middle and upper income households, and they have built up a lot of savings over the pandemic. So that's unlikely to really restrain spending at the aggregate level. But if you look at different groups of consumers, certainly these will hit wallets very hard.
Young-Yu, it's Julie here. Let's bring it back to the markets because obviously we're seeing selling once again this morning following these numbers. Where do we find a bottom here?
I think we do just need to give it time to see better numbers. It has to play out that some of these inflation readings come in a bit softer. It is going to be important to see the PCE numbers show much better numbers, much better readings than the CPI numbers. And that, I think, would give the market some confidence that inflation lid in peak is in. But it's going to take some time to play out because we have things going in the wrong direction now. We have inflation still high, we have growth slowing, and we have the Fed raising interest rates. And until we see some stabilization in these three elements, it's going to be hard for the market to really regain its footing.
All right, we'll leave it there. Young-Yu Ma, Chief Investment Strategist, BMO Wealth Management US. Always good to see you.